Okay, so let's actually dig into some charts. Because again, understanding directional bias without any smart money concepts, any market structure, any multiple time frames, or any indicator, nothing. We just need nothing. We just need to understand the knowledge of pure liquidity inducement, and that's it. That's literally it. Obviously, you can add a lot of stuff. And again, yes, we have multiple of confluences we can add in, but technically, you don't need anything. Let me show you. So, when we just look at this little piece of price action, so can we guess what the world is seeing and how the balance between buyers and sellers looks like in here? Can we just guess? It's obviously very hard to guess with just a little piece of price action. So we only have like a triple top in here. We have a double bottom in here, maybe even a triple bottom, whatever you want to say it. So now what you have to do in your mind always now, just make this, boom. This retail or world buy sell meter thing. You don't know, it's just a range, double top or triple top, double bottom, triple bottom, whatever. Maybe there's a little bit more sellers in because you have a very clean triple top in here and whatever, just a double top bottom on here. So again, this is what you have to do in your mind, right? So again, then just do nothing here. Just do nothing. You just wait until something like this happens. Oh, okay. So the triple top holds. Break out of the equal lows. Okay. So obviously break out of this strong resistance zone. The support holds, huge momentum. This is obviously when the world is starting to sell. But again, it's not enough. They want to drive price lower. That's why they show a trend. They show the speed. They show the momentum. And at some point, the world is selling. The big boys, they closed off their sells. Maybe they opened it up in here, right? Again, they closed off. The world is selling enough. Again, they can't close off any more sells because they closed everything. So what's about to happen? Obviously, when the world is selling, the big boy club sold already off their positions to the world, and they can start opening their buy positions. So they say, thank you, Enigma, for delivering price action to let us close out all our positions. And now everyone is selling and giving us the liquidity so we can open our big buy positions. So question to the chat here. So what is going to happen when the world is selling and they have the final inducement to the low side? What's going to happen to this price action here? Exactly. So obviously the moment everyone is selling and the last inducement is in place, price action start reversing. Sellers getting taken out, buyers enter. And you always have to think about this meter, again, how it changes slowly. But again, not every seller stopped out. It does maybe seller stop losses up here. Maybe they opened their positions in here. They're still in there, whatever they did. And at this point, a few sellers getting stopped out and buyers enter. So this meter is about to change slowly, right? So more buyers are starting getting in. So they have to make sure to add some more sellers into the game to balance a few orders. Again, they can't just move price action in like one way up. They very rarely do that. So they have to give all these people reasons to buy and sell so they can scale out, create liquidity to stop out these people then. And at this point, they do what? Again, they show the equal lows, they show the support, they show the little trend, right? So how can they create this, right? So of course, boom, now they're showing also this quadruple top. Crazy, can't get broken, there's imbalance, there's your little supply area. Again, smart money traders getting excited here because they have the break of structure, blah, 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 all that stuff, so they're getting direction. But on the other side, again, there's a little trend forming as well, so buyers getting in, sellers getting in, it balances out a little bit. So again, we have the reaction of the double or triple top, and we also have a third touch of the trend line. So now, at this point, all hell is breaking loose, as the invincible resistance of the quadruple top just literally got broken. So breakout party is going on. So also the third touch of the trend line is skyrocketing. So the smart money traders obviously are stopped out anyways if they sold off the imbalance, whatever supply in here, right? And again, but trend traders, they're getting very excited. Breakout traders, they're getting very excited. Support traders, they're getting very excited. This overall momentum, very excited. Again, what is actually about to happen? So what is about to happen when you have this inducement in here and the world is getting a little bit too excited about buying in here? Thank you, Enigma, the corporations say. And again, they can literally start opening opposite orders because people buying like crazy. And again, sellers are getting stopped out. So they have the liquidity to open pullback sells. What a surprise. Boom. All right, but at this point, obviously a full seller is getting stopped out. With the structure here, there's a Koch in here, right? So you have the break of structure, so smart money traders. Again, they still might be trading the buys in here because yes, equal lows being taken right into a little demand area in here, right? So it's still a trend in here. Yes, break of structure to the left. Oh, so buyers getting in. But if you look at the meter, buy liquidity is literally in overhand. Smart money traders come in guns blazing, looking for the continuation order flow. But again, they know that. They know that. So note that the majority of the world is literally buying. Once again, there is a trend forming. You had a massive breakout zone and price is showing a reaction of the smart money demand zone in here. Right? So what is about to happen? You maybe notice. So what is about to happen right here as well? If the most of the world is buying, do they want to make buyers money? Or do they want to actually sell them off, stop them out between these zones, right? And actually make profit out of them. Of course, they say, thank you, Enigma, for delivering price action to give this reaction, right? For first of all, the majority of the buyers of the smart money zone, right? To also fake sellers in for the overall plays, right? But again, now you of course want to stop out the buyers as buyers are getting too much. So how do they do it? Boom. Here is what? Majority of buyers are either stopped out or out of break even, and sellers enter, as again, we have the Koch in here, the change of character, the break of structure, momentum of the trend line, further of the trend line, and of course, support double bottom, right? Got broken in here, right? And a little counter trend reaction as well from here as well. So obviously sellers are getting in. Buyers are stopped out, they got liquidated. But again, now the world is selling and there's no buyers because usually normal buys off of here. They usually buy off down there or maybe in here, but no one buys in here. So what can the big boys do, right? So what's continue to happen? Inducement of all the sellers. Again, the sellers getting excited, buyers are getting stopped out. So in what direction can the market continue? What's about to happen? Thank you, Enigma. We can close our positions. We take the opposite side. Again, people are forced to buy as again, forced to obviously sell off as they're getting stopped out, right? And obviously they can open their buys for themselves. What's about to happen? Of course, a reaction. Buyers slowly getting back in. Better add some sell liquidity to take out some buyers again. How do they do it? Creating a double top in here, trend line. The trend line trade is getting stopped out to become, of course, liquidity in the long run. They show again the fake Koch in here coming from a double top order flow reaction with imbalances in here. Again, so what's about to happen? When people selling, of course, they continue the buy push. Buyers getting attracted now, though. As again, look at this reaction. They have always create counter side liquidity to balance the market. Again, now buyers are getting into control. How can they easily create it? They just give you another double top. Really? But also for buyers. Oh, Sakba?
I don't think your pen's working.
Oh, I think I just do it with my mouse. I don't really draw.
Oh, okay, cool.
Yeah.
Because everyone's like commenting.
No, we can't see the mouse either.
Oh, you can't see the mouse either?
No.
Okay. The problem is if I use my pen, I can't switch the slides because this thing doesn't let me. Let me just try like this. There we go. Let me just do it like this. Okay. So I hope you just thought then the whole thing through with your mind, as it's a little bit exercise for you without seeing anything on the screen then. Right, but again, this point is pretty obvious. Obviously, they create another triple top in here. They're creating still the illusion of the little trends. Again, a few buyers obviously have to get excited. That's this little push still, right? But what's actually about to happen? You probably guessed it right away also. Boom. This is the FOMO breakout for all the rest of the world who sees all this crazy uprun of the market. Again, sellers are getting stopped out of this little fake equal highs, triple top again. Breakout traders getting very excited. Mental traders getting very excited for the buys. They better take a few of them out and add some false reversal signals. So what is this actually though? The inducement. And funnily enough, isn't this exactly the same thing we just had literally earlier, just a few seconds? So again, what's most likely going to happen after the world is very excited about to buy price? Of course, they will stop out a few of them prematurely. How do they do it? They obviously fake the first Koch, where the first breakout seller stop losses are below there. And of course, faking the change of character for the smart money traders, leaving the imbalances in these areas. And of course, then they can stop them out continuously by going even longer, right? Boom, stop them out surely. What do? Now they're forming the fake channel. They give another Koch inducement low to do what? Right? So now at this point, again, look at this huge range. For them, it's just literally playing the shepherd who has to watch over the sheep, keeping them in their little place. And now, as it's balanced out again, they can push price even higher as they did what? They obviously induced the low once more time. They showed the little trend line. At this point, no, they will not go lower. They induced low. They faked the trend line, right? So induced low to go what? Higher, right? So now they are getting way too much buyers in though. So they still want to push price a little bit higher though to fulfill the higher time frame purposes as well. So they have to start taking a few more buyers out and bring in a few sellers. So how are they going to do it? Again, we saw multiple examples already. How they're going to do it. There's my fancy pen thing again if it works. Right. So again, how do they do it? Always fake Koch, fake Koch, fake Koch, fake Kochs. And obviously they're going to probably do the same thing in here as well, right? But again, maybe at this point, it is already the final blow. We're going to find out very soon. So Cam, how do we close this drawing thing? Oh, there you go. Right, so at this place, obviously too much buyers are getting in, so they have to obviously reverse the market at some point. How do they do it? Once again, fake Kochs all over again. It's the same price action we literally had right here. Look at the trend line, look at the trend line. Oh, look at the trend line here. Look at the Koch in here. Look at the fake breaker structures in here. They do the same thing. Again, they have to prematurely stop or bring people in the wrong direction so they can push price action actually higher one more time. Again, faking off smart money traps over and over again. And at this point, inducement low. Notice the buyers are still having the maturity. So again, we can expect reversal soon after one last death blow for the buyers. So how are they going to do it? Of course, you probably guessed it. They're going to choke them all. And at this point, again, they did this place, as you probably noticed, so many times. No more, one more last push high, and no one can be selling anymore. There's another huge momentum now in the market. Everyone is stopped out for premature sellers. There's no more sellers. All the smart money traders are prematurely getting the fake break of structures, the mitigation, all that stuff prematurely. They're all getting stopped out. There's no more no more sellers, only buyers. So if you take this price action, draw it over to left a little bit to get a little bit more breeze in here. Now we finally have our last inducement to the high side. If you look at the world's buy meter, everyone obviously is buying. There's no more sellers. Again, the architects or the institutions or corporations, they closed out all their last little buys possible. And the world is hugely in the momentum of buys. Everyone is buying, no one is selling anymore, because for the sellers who tried to sell, they got their reasons, they got stopped out though. So what's about to happen next? Very good, Diego. Right, so of course, first of all, they say, thank you, Enigma, for our huge pile of money. Let's start the whole thing over and over again. And now again, as the whole world is buying, they can start their sell plays right there. So what was going to happen? You probably guessed it, didn't you? At this point, they don't want to just smash everyone instantly though. They obviously are way smarter than that. So they do what? They want to bring in buyers to create liquidity, to create stop loss areas, to give people reasons once again. So exactly, create buy side liquidity on purpose. This time they want to sell, so they need buyers to stop them out for liquidity. And if sellers getting stopped, they obviously are forced to buy, right? So they're faking obviously the quadruple bottom, fake kochs of the smart money zone, breaker to the high side, and some momentum into it. Sounds like a good recipe to create buy side liquidity. And again, now think about how many times this exact price action happened to you when you tried to trade the continuation. You have all these kochs in the place, right? Again, just think about it. Again, you have this supply area, right? You have this little first koch in here. Oh, it didn't work out here. It fakes the smart money reaction. Oh, stopped out again. Oh, it's still valid. It's still in this supply or demand area. Another koch. Oh, let me take this trade. Oh, yeah, it works. Woohoo, now break of structure to the high side. Amazing. What is it really? It's the inducement high to give people the reason to actually buy off of here again. They're already giving this reaction of this little supply area, imbalance area of the demand, right? It's the same stuff. They're doing it over and over again. And the reality, again, they're all getting induced here. Just, again, the buy direction just to stop them out. So how do they do it? Of course, as always, as we covered multiple times, they'd be like, first, thank you for the liquidity. And you probably already guessed the next move at this point. They're all going to tube them. And once again, they'd be like, thank you, Enigma, for giving us the liquidity to inducing people the other side of the direction. Now let's deliver price action once again. Let's give them the trend. Let's give them the reasons they need to sell so we can scale out of our positions. And obviously, the moment we enter the next demand area, what are we about to do there? Of course, let's switch the chart first. Let's give them the fake reaction. Okay, obviously it's a demand area, so it has to obviously react from it. Smart money traders, oh yeah, sure, of course. So we obviously need some reactions from there just to stop them out. Too bad for them. Get out the buyers as they're taking the sell side liquidity from you and add some trend sellers, support sellers, breakout sellers, continuation sellers, momentum sellers. So again, look at the meter. Everyone is starting to sell though. So of course they have to fake some moves. How do they do it? Right? So again, boom. First of all, it's the same thing. It's more unbalanced as the more sellers are in. So how do they have to actually get out a few sellers? Easy. They just make one little easy trick, give the world this koch, the break of structure, stopping out the sellers who took the equal highs, the breakouts, the momentum. Again, and now look at the momentum to the upside. It's the same thing. People are getting stopped out, and as you look at the meter to the right, again, the sellers are getting less, and a few buyers actually enter. And that's how they can keep balancing these orders for their benefit. And again, what does this also do for the smart money traders in here? Let's see. What is this here? Do you think this is a valid POI or no? If you look at the sellers and buyer meter, it's probably not a good idea to sell it, to buy here. All right, so let's dig into it. So the next point, obviously, what they're about to do is they do this over and over again. Right, so again, they're showing the kochs, they're showing the fake break of structure, they're showing the liquidity, they give another trend in here. They're just doing it over and over and over again to a certain degree where they just can't get more sellers stopped out. And again, everyone is selling anyways, and they scaled out all of their position. And at this scenario, again, if you're a structure trader or whatever, smart money trader, this is happening to you. koch, break of structure, poof, poof, koch, 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 break of structure. And they're getting stops and stops and stops and don't even know why. They just be like, oh, break of structure, imbalance, into mitigation, oh, too bad, stopped out again, valid loss, blah, blah, blah. It happens to them over again. Look at them. They don't even know what's going on there. Again, there's so many sell opportunities if you actually understand liquidity, and they induce high to go lower. You can't trade inducements with the trend. Of course they can do that. Right? Again, inducements doesn't mean reverse all the time. If they want to continue price action to push lower, they just have to induce high first and then continue lower. Look how they do it. Trend line, 1, 2, 3, 4 touches, 5 touches. Oh, induced high to go higher. In the process, just faking some kochs of like a demand area. Perfect. Another trend line. Oh, just induce it high to go lower. In the process, just create some kochs. In the process, some kochs in the process, some touches of the trend line. But at some point, obviously, you notice, oh, the sell meter is getting too much sellers getting in. So obviously, they have to return price action soon. So how are they going to do it? Obviously, now at this point, early former reversal traders taking a deep breath as they're getting a good whipping for the last hours. Right? So they're being like this guy, like, ooh. They just don't realize what is going on even. But again, everyone is selling. Now at this point, everyone is selling. So what do they just have to do? Giving the last death blow with the momentum, with the speed, building another trend line, like all that stuff. And now really sellers are in full control. They can't close off any more sells for themselves. The whole world is selling at this point. So what's about to happen when you identify that properly? Thank you, Enigma. Look at this big pile of cash the world just provided to them. They obviously can close off all the sells and open their buy moves and start the whole thing over and over again. Obviously, they're not going to stop at everyone at this instantly. They're going to build it up. First, guess what? Let me just get my pen again here. It's the same thing. It's the same thing as always. They're faking here the kochs. Where's my little pen? They're faking the kochs in here. Again, they're building the equal lows in here. They're faking the smart money trap in here again with the reaction. Right? They're faking kochs in here to the low side. They're building the trend line, inducing it short to go higher though, to push price action and slowly start trading the trend to make reversal traders excited. Again, but they're already in the moves to prepare their long moves. So how are they going to do it? How are they going to do it? Let's see. Do they stop out every buyer instantly though? No. Do they create liquidity first to bring in new sellers on purpose and then stop out all the buyers to then liquidate them for themselves? Of course. So how can they now look at this chart if they actually want to go long, as again the majority of the world is selling, they completed the sell moves and now they want to go higher? How can they achieve to stop out everyone short to go high? Very, very easy. Boom. Just one last inducement to the low side. Just showing one last trend. Just showing one last koch in here. Break of structure. You're taking out all the buyers from these areas. And again, the only people who can buy here is actually the ones who understand liquidity properly. You have all this liquidity created. They all created, they completed their whole tasks. They're preparing the reversal. In the process, they stop out short to go longer. They stop out short to go longer. They give people the reasons to sell. They give the false smart money traps. They show the trend. They fake the kochs here and here. They show the momentum now. They break out of all these little zones internally in here just to mitigate one more time of the extreme of the inducement to go what? The $1 million question. What is about to happen next? Of course, they all getting tubed and it's the same process over and over again. At this point, they just say, thank you, Enigma. They literally made billions in the process while the rest of the world didn't know what the hell is going on. They just literally make a heart with the Enigma. They ride into the sunset. And that's literally all you literally have to understand for the rest of your life. Your task is only to find out this retail meter on a proper way and see that direct liquidity is getting induced to push price in their favor. Induce high to go lower. Induce low to go higher, and induce high to go lower. The same thing. Again, they can do it for continuation. Oopla. Let's actually go one shot back. That was I will show you that. This pen thing, I'm gonna tell you guys, it's crazy with this software here. Right, again, if they do it for the reversals, obviously okay, let's see if I can figure that pen out in here. Because usually Zoom pens work a little bit more smooth. I have to draw on this one. So when they're gonna reverse, no, come on, give me my pen. Give me the pen. There we go. So if they're gonna obviously build liquidity to the high side, stop out the trend line, faking the costs, induce high one more time, that's when obviously the price action is done, inducing to the high side. When they're gonna continue price action to push higher, again, easy, they just stop out people to the short side and continue higher. They can do that over and over again, and they do it all over again. So inducements work for continuations, for reversals. You just have to identify them properly. It's pretty damn easy. Again, to show you actually some very recent chart examples here, which are really easy to grasp, and where you see where everyone else is getting stopped is this like little pattern in here, if you want to call it like a pattern. Again, you just have to identify where the trend is formed. Third touch of the trend line. Then again, they induce the trend into the high side. They faking the costs here and here. This creates the smart money trap, right? Which gives you imbalances. They give you the smart money reaction just to liquidate them as well. And then again, you either can take the inducement here, or you can then wait for the real directional change and then actually trade away from the liquidity. Again, this is just an example of like, what is it, like 2 weeks ago, where you have exactly this price action over and over and over and over. Again, it's literally the same shit all again. Another example where the same thing happens. Again, literally a few weeks before, or like a few days before that. It's the same stuff. This one is literally from a few days before that. It's the same thing. This one is literally from Friday before this webinar. So the last trading day, whatever that is, AUD, USD, you can check it out yourself. It's the same shit all over again. You just have to identify, again, where the masses are getting the third touch of the trend line, where they're faking the costs here and here, where they're creating the smart money trap, where they're giving the false smart money reaction, where they stop them out, when they give the real actually direction of the change, when they actually then complete the moves, and then when they fake the liquidity, give them the reasons, make another breakout here, fake the double top in here once again, fake the breakout to just stop them out to the short side, stop out all these buyers in here, the trend to just continue higher. It's the same shit all over again. You just have to identify again also where smart money traders getting stopped out to complete the move, and that's on repeat. Again, another one. What is it? A few days also from Friday, a different pair. It's the same shit all over again. The moment you get this in your head, it's that easy. Just see the meter, and then people getting excited, and everyone's getting stopped out, and then wait for the real directional change, and then enter the right way. So a lot of talking. We're almost like 1.5 hours in at this point. So I'll give you a quick summary here. So know the main strategies that bring in liquidity. Know when they actually get in, when they get out, where the stop losses is, where the take profit is, what they feel, what they react, what gives them FOMOs. Create this form of liquidity avatars and know exactly when they enter, and then actually just wait until they're getting stopped out and then trade in line with actually what the big boys do. And if you only do this alone, literally, you're better than 90% of traders who only think about their own strategy and don't even think about outside the box and other market participants or other true market intentions. And again, they don't even think about the goals of the architects, the goals of the enigma. They don't even know that this exists. Again, you already elevated with this mindset, with this knowledge already in the little minority of people who know about that. And this, again, will bring you more clarity, patience, reduces FOMO. You can literally wait patiently while everyone's getting stopped, or then trade in line, away from the inducement if it's a continuation or even a reversal. You will be able to identify it. And again, you just have to wait until all traders are taken out and do the exact opposite. Everything in this market is a fair exchange. The market takes from the incompetent traders and gives it to the competent. At this point, you already elevated yourself with a knowledge not a lot of people have.